Hello, this is Dave, and welcome to Equity Story. And just as normal, this is just general share advice and not personal advice, as per the disclaimer. Got a different window today. I don't know if that's going to confuse everybody, but got a nice little round window instead of a square one. So a little bit like I don't know, play school, isn't it? Square window, round window. Well, anyway, I suppose the question is, what are we going to look at today through the round window? Um, we're gonna I think we're going to have a look at China today, right? But and then after that, I'm going to look at some announcements. So some very good ones, and certainly definitely one from Anson, which looked interesting. So firstly, what I want to do is just look at the markets last night, and what we saw was a little bit of a bounce. Now, I'm not getting too excited about it. That was largely because one of the Fed members came out and said, "Oh, guess what? If we see things getting really tough out there, we might slow down a bit." Well, it's not what all the other Fed members are saying, but the market l- grabbed onto it. I think it's a little bit like you're drowning in the water. You're going to grab onto any piece of wood you possibly can. Um, from our point of view, if you're trading a few stocks, enjoy it. The market's having a little bit of a bounce today. We'll, take advantage of that bit of bullishness. Um, I think the other thing that, what I really want to talk today was China, because it's always been the case, hasn't it, really, a little bit over the last sort of 15, 20 years that China will save us. China will do a stimulus package, and they'll get moving again, and suddenly there'll be a lot more wealthy Chinese, and all going to be coming running to Australia and spending their money. So I think it'd be really interesting today. um, just have a look at China, and I've been a bit naughty. I've been sort of stealing some pretty good charts off some good websites in England, notably PensionCraft. But I want to bring some of their charts over and go through, and we can have a look. So just have a little bit of an idea, what's happening in China. This is a great, this is a country where the Asian world has been leaning on for the last sort of 15 years. And when we look at it, actually doesn't look too good. So these are the China GDP numbers. And so this is a growth, and you can see China has normally targeted, it's been higher, it's been about 6% and sometimes even higher, but it's normally targeting about 5.5% quarterly GDP growth. Um, Recently, in the last quarter, it's down considerably to zero point 0.4. Now, apart from when it had COVID and it had that massive dip, this is actually pretty serious, and you can see there are issues developing in China, and so we've got to watch it really carefully because this is going to affect, isn't it, our investments? What are we going to buy? Copper stocks, aluminium stocks, nickel stocks, um, iron ore stocks. We really need to keep a close eye on really what's going on in China, and it's quite interesting with copper, and you can see what the guys from PensionCraft do very well. They have a look and how they compare the movement in the copper price compared to the GDP growth in China. And it really is very similar. And you can see copper coming down considerably as China is suffering. Um, the other thing that we're having a look at in China is, the economy, the interior economy, what's happening. China sort of changed over maybe the last 15, 20 years from being a country that just uh, produced products and sold them to the rest of the world to suddenly developing a strong economy within where people had money and they were buying products, and their economy was sort of flourishing on their own, so to speak. But again, you're seeing this slowdown there, and you've seen retail sales numbers down to 2.7%, industrial output down to 3.8%. You've seen unemployment down to 5.4%. But I think importantly here, youth unemployment at 19.9%. Um, that is absolutely shocking, really, when you think about it. And that so many young people unemployed in China, which again is a massive worry because you think the Chinese state would be, they're sort of on a little balance anyway, aren't they, with what they're trying to do and what they're trying to create. And the last thing they want is the people to turn against them. But that unemployment rate is serious. And when you see a unemployment rate like that, at the moment, definitely they must be suffering. Some of the reasons they have been suffering is obviously COVID. It's affected everyone around the world. And I think even more so, there's another little graph I can bring across in China, where they sort of developed a different policy. The rest of the world, we sort of said, okay, we got COVID, we get through it, it doesn't really harm us. They're still having these massive, massive lockdowns, which are not helping things at all. Um, you've seen these COVID cases just spike recently, and certainly spiking in some of these different uh, cities and provinces. But the silly thing is, they just close everything down, and I think it just makes the situation worse. It really affects their GDP growth, it affects their production, and really they're sort of um, kicking themselves, so to speak. The other issue at the moment, which is a major issue in China, funny enough, is drought. They've got a really, really, really bad issue with drought, and as China has just grown its industry and grown its cities all around China, what it hasn't done correctly, it hasn't grown its infrastructure and grown its dams and its ability to um, sort of look after those cities with plenty of water. And there's a really interesting little graph here which shows the problem where this little red area here is where most of the construction is and movement, and this is the rain. And you can see there's massive areas that just don't have enough water. Now, as a result of that, you've got a number of companies. Foxconn is one of them. Toyota. They've actually had to stop production because there's just no water in their plants. And again, this is just a serious, serious problem for the Chinese economy. Another really interesting chart I can bring across to just show you the problems they're going there is the new home sales in basically all the tier one, tier two, and tier three cities. So um, if you take if you look at these graphs, this is tier one. So this is the sort of how do you say the bigger cities, the most popular, and this is new home sales. And this is the tier two, three, the smaller home sales. And I just try and make this a little bit bigger so you can see. So you've got two cities um, this year that actually had some growth, and that's from sort of 10% and 30%. But that's your zero line. But below the zero, you've got negative growth in basically nearly the main tier one cities, which is down to 20%, 25%, 30%, 40%. And the tier two, three, tier two and two, three, tier two and tier three cities um, down considerably, like 80, 70%, 50, 60%, and only two actually positive, which again is absolutely extraordinary, and it shows you that property market is seriously suffering at the moment, and definitely got a little bit of a there's definitely a little bit of an issue there. In fact, maybe not a little bit of an issue. I'd argue quite a big issue. Um, so when you've got this issue in China and you've got this, the whole Chinese economy is slowing down, I think we do have to be really careful of investing in some of these resource stocks. And some of the biggest commodities that are used in the sort of the real estate market in China are really copper, nickel, aluminium, and you can see really, can't you, exactly why with this slowdown in China, your AWCs of this world have been going down. You can see by, for example, your nickel stocks have been going down, and your copper stocks like SFR, and we've seen some of those smaller plays like EM2 suffering a little bit. Um, so as we're investing, and I know there's a lot of members of Equity Story at the moment that are really enjoying making money from coal and really enjoying making a lot of money through these lithium stocks, there are certain commodity stocks with this slowdown in China. I think we have to be very, very careful. I suppose some of you might be saying, well, Dave, what about iron ore? Iron ore. And I think, yes, of course, iron ore could go down. And iron ore is certainly definitely on that list. And I think again overnight we saw iron ore go down. Let's have a look at Fortescue a second. We saw iron ore go down again just under $100. Possibly, what I could argue, maybe, um, if the economy in China gets really, really, really bad, the Chinese government will put together a stimulus package. I think they might have to. It might not come now, it might come 2 or 3 months. That historically, although it's lagged, has been quite those stimulus packages where they say, right, we're going to build lots more bridges and hospitals. That can give these sort of commodity stocks a little bit of boost. And often Fortescue, um, uh, iron ore is one of the main ones that it could help. Maybe a little bit more, maybe a little bit more than copper and nickel and aluminium. Um, so we will see. So, but again, I think we just got to be careful of these stocks. And at the moment, quite understandably, focus where all the all the interest is in. Just focus on the coal stocks and focus on the lithium stocks. And at the end of the day, I think that's the place to make money at the moment. Um, reporting season is over, and things are a little bit quiet. There were some announcements today. I can quickly have a run through. The first one is Link. Um, and you know what? I've got to say, I just, sometimes I look at Mr. Wolfie and he's having a well-deserved holiday. And really, he hit this on the head absolutely beautifully, saying, as a risk-reward proposition, Link was very interesting with this takeover target. Now, it does have a number of sort of regulatory authorities it has to get through before this takeover goes through. But they hit a big one today. The ACCC gave it a tick of approval, and it's up 6%. Um, Again, everyone can make their own. If you did buy it when Wolfie talked about it, you can make your own decision, take a profit, or hold on. Maybe the risk reward is still okay, or just take a profit. Nothing wrong with 6%. Absolutely brilliant. Um, Little story we had on ASN. I had it on, I had it as bullish uh, a while back, and very thankfully, one of our members, uh, arguably, took a bit of a punt on this one. But anyway, that's his business, nothing to do with us. We only give general share advice. But um, I had it on Einstein's. I liked the chart this weekend, and I put it on again, and it had a very, very, very good, I thought, announcement today. And I just want to go through it with you because um, the first thing that you really want to look at when you get these sort of announcements um, is just find it here, right? The first thing you want to look at, and is who's done the DFS, the feasibility study. Who's done it? And the first, what you're interested in this is Worley Parsons have done it. A very good company, a very trustworthy company that you feel have got the right people. But also, we've seen it time and time again with a number of companies where they put when they do their pricing to see if the product is could make money, they put the prices of whatever they're trying to sell ridiculously high. I was really pleased with Anson that they've actually be, sort of been really sensible, and you can read it here. They said the adopted lithium price forecast from Benchmark Minerals as depicted in section 7. Anson has assumed the base lithium carbonate price forecast with a long-term price assumption of US 19,000 per ton of battery-grade lithium carbonate for the purpose of this economic analysis. Anson notes that the current lithium carbonate prices of US 70,000 per ton will exceed market forecasts. So, fantastic. They haven't gone up at that US 70,000. They've come and put it what they believe is possibly a more realistic price where it could be in the future with supply and demand. What I would note is there has been quite a period that where it has sort of hovered between that sort of 15 and 20,000 per ton. But I think with the demand of lithium at the moment, certainly for foreseeable future, I think that looks very, very sensible. Um, and you can go on and read. You can look at the announcement and you can read. They saying obviously it confirms strong economics to get this product up and running. Now that was our only issue really when we look at this stock, and we're quite excited. We just because it's a different and it's a really good sort of much more renewable type of lithium extraction product that has been used in four companies in China, but hasn't been used, I believe, anywhere else in the world. And when I spoke to our lead resource analyst, Wolf, he was saying to me, Dave, I just need to see that DFS. And I think it's come out very, very well. Um, so I think over the long term, I could see this going higher. The market is really giving it a big boost today. It's up 25%, which is superb. I think Tim will be running out of his red wine by this evening, but I think over time it's going to go higher. Obviously, what they're going to have, it's going to be volatile because you're going to have the raises that come in that get this company into production. But when I look actually at the market cap now, and I'll have a look at it, and we can have a little look at Anson. The present market cap is about 375 million. Um, I've seen a lot of other similar companies looking to get in production in this lithium space, trading at higher multiple or a higher market cap than Anson uh, Resources is at the moment. So if I was in that, I'd be holding it. Um, but expecting volatility, but I think in the long term, hopefully I'm going to be pretty well rewarded. Uh, Link was spoken about NTO. Interestingly, they've said put a letter to shareholders saying we're not going to accept that takeover offer. It's ridiculously undervaluing the company for where they are, and I think they've stubbed it. And they're talking. Most analysts are saying at a 195 or 195 evaluation, and most of those analysts they believe are totally misunderstanding the uniqueness of their business being one of really two companies in its sector, the two leading companies in its sector. So I think if that private equity firm is going to get hold of NTO, they're going to have to pay a lot more. Whether they do is obviously up to them, and I've got no idea what's going to happen there. Euro, again, it's another lithium stock, but again, be careful of the big headlines, which are just rock chips. I would I would be buying obviously this one, and I think again we're seeing lithium stories do really well. Just be really really careful of the big headlines. Really go in and have a look at those reports and make sure there's actually something. It's not just rock chip samples or they've shoved a bit of dirt and they got excited. It's something really positive. Um, and Pexa. So again, just struggling to get through trend, but another I think bullish acquisition they've come up with today. And again, get it on your watch list. This is um, I I think our sort of fundamental department with the Wolf and is amazing, and it's one of the stocks that we do like at the moment. The market's tough; it's not trending, but this is maybe one of the stories that when we get the big fall, if it happens, we need to maybe have a look at. Um, Apart from that, I hope you've enjoyed today's video, and I look forward to um, chatting tomorrow and maybe looking at something different and see if we can see what's looking good to buy at the end of the week. Thank you very much. Bye bye.